What is going on to the AMC stock group? In this video, I'm very excited to be talking about margin, and this is usually not something that I'll be very excited about, but because it is related to the hedge funds and because there's so much valuable information that I did not even know about all this margin statistics, I think that we are in for a very big and massive uprising in AMC stock because of what I'm about to tell you right now. So let's go ahead and now talk about the hedge funds and how they correlate and relate to margin. So we have a lot of margin statistics that we can go ahead and talk about. And right now, what you're about to hear is about customers' margin accounts. And you guys might be wondering, why are we talking about consumers and customers and retail traders and investors? Why are we not talking about the hedge funds? Guys, the hedge funds have even more money than what you guys are about to hear right now. So look at this. Debit balance in customer securities margin accounts. And by the way, I'm also going to be talking about why margin is so important because this all relates to short squeeze, and this is all related to the fact that a lot of hedge funds right now have a lot of short interest in AMC stock. And I'm also going to be pulling up the statistics about just how much shares hedge funds right now have shorted of AMC stock. This is all very important news. So let's start off with January of 2021. We saw that margin was at $798 billion. That is how much margin customers had or consumers. And the reason why I say that is because this is shown in millions of dollars. So you do 798,605 times 1 million, you will get 798 billion roughly, and then the rest of the numbers. And so February of 2021, we do see an increase in how much margin these customers have. And remember what I told you in the beginning, hedge funds have even more margin because these are hedge funds, they have millions of shares. And unfortunately for us retail traders, we definitely do not have millions of shares. That is just logic, that is complete logic, and that is 100% true, right? We simply don't have that. And so you go to March of 2021, $822 billion in margin. April of 2021, $847 billion of margin. May of 2021, $861 billion of margin. And so now, not to waste any time, right, because your time is extremely valuable, especially over this weekend, guys, you guys already know that AMC theaters are going to be able to show off the Conor McGregor and Dustin Poirier fight, the UFC fight that a lot of people are waiting for, and the fact that they're only doing it for $20 and less, that is absolutely insane. I have yet to hear about any type of agreement like the one AMC has made with the UFC. The fact that they were able to form some sort of agreement, especially with the UFC, that right there is amazing, and I'm very excited to see just how much money AMC ends up making from this fight, and because they're able to, pay-per-view it for a very cheap price. You guys will not be able to get it for $60 to $75. No, that is not how it's going to be. You guys will be able to watch the fight for just under $20 per ticket. I've never heard that before, but anyways, that's besides the point. And also, one thing I want to mention about that is it will be able to now have a lot of actual fundamentals behind it. Right now, we all know, right? We are part of the movement. We are in AMC stock because we want to support a movement and because we are part of a community. A very unique community, I must say. I have never seen a community as strong as AMC. And the reason why I say that is because GameStop had a short float to begin with, meaning that there was not a lot of supply. And so as soon as the short squeeze begun on GameStop, it just kept on going and it was a linear path to the upside. AMC did not see that. Why did not see that? Because there was a lot of supply to begin with. There was a lot of float to begin with. There were a lot of shares outstanding. So I'm going to talk about that in a later video. But anyways, I was just trying to say that AMC's community is honestly very resilient. I've yet to see it in any other community. Now let's go ahead and compare the margin statistics of the 2021 year to the 2020 year. So let's just go ahead and talk about December of 2020 because this one is the closest to any of these numbers. So $778 billion in margin. Okay, big deal. Now we are going to actually use these numbers and talk about why it matters. Okay, I'm not going to even talk about these other numbers because you guys can see these are in $530 billion. These are $485 billion. This is $390 billion. Nowhere near close to where we are right now. And so what does that mean? Well, ultimately what that means is that hedge funds are not in the best situation right now. And why do I say that? It is because they have too much money and they are going to exactly repeat what ended up happening to, unfortunately, some hedge funds just a few months ago in February with GameStop. When GameStop, the whole short squeeze ended up happening, many hedge funds ended up going bankrupt because they were shorting GameStop. However, GameStop went extremely high because I'm going to explain short selling right now. When you short a stock, if you go to your broker, I do not believe Robinhood allows you to short any stock unless you decide to use options for the stock. For example, if you decide to use a put option, I think that is the only way you could short a stock on Robinhood. However, Webull and TD Ameritrade, you guys are able to short a stock because all you have to do is click the sell button, okay? So as soon as you click the sell button, not the buy button first, you guys need to click the sell button first. then you can decide to short a position or create your short position. And then what you need to do is you need to buy back the shares. So you need to click buy, and what ended up happening to these hedge funds, guys, they first decided to click the sell button when GameStop was around $20 and $40 a share. And then what ended up happening, guys, is GameStop ended up going to $100 a share. And then what ended up happening is these hedge funds put so much money into GameStop for their short position because they thought there was no way this stock is going to go to $400 a share, $500, $300, $200, even $100 a share. And so when GameStop went to 100, the hedge funds could not take it anymore. They had to liquidate so much money. And liquidation is basically when you have to sell a lot of your position in any underlying equity. And so what ended up happening, guys? Hedge funds ended up going bankrupt. We are just about to see the same exact thing happen to AMC stock because the short interest is increasing, and not only that, hedge funds are creating monumental margin. They have the most margin that they have ever had ever before. And with the short interest increasing, I think the number has risen about 1 or 2%. For example, it was at 18%. Now it is somewhere between 19 and possibly 20%. But the most important thing is the margin, right? So with the margin, we have historic levels of margin. This has never been seen before. In fact, you go all the way back down to, let's say, 2015. $541 billion, that is nowhere near close to the almost $900 billion right now in margin accounts. And this is not even for hedge funds, guys. That is why I'm talking about the customers and consumers, the retail traders. If the retail traders have almost $900 billion in margin as a total, how much margin do you think the hedge funds have? And so with the short interest increasing, and because the hedge funds are creating the most short interest in AMC stock, what happens when AMC stock decides to go up? What happens when AMC stock decides that it is going to go back to $61 a share, or $81 a share, $91 a share, $200 a share, for example? These hedge funds have a real possibility of ending up going bankrupt just because of how much margin they have. And so we know that the current short volume for AMC stock is 85 million shares roughly. The previous short volume was around 102 million shares. And the reason why I think this number decreased in and of itself is because hedge funds said no more. And what I mean by that is Charles Schwab, for example, and this is not for the total amount. This is not a universal count, right? Not all the hedge funds are saying, okay, let's take it back. Let's not short AMC stock. No, this is not universal at all. But what I'm trying to say is that I do believe that the reason why this number has decreased over time is because some hedge funds and some institutions have limited and have put some restrictions on how much you can initiate as your short position. For example, Charles Schwab recently limited the amount of short interest and the amount of shares that you had the ability to short for any underlying equity. And I think the reason why they did that is because of AMC and GameStop, right? They did not want their institution to lose a lot of money. And so I think that is why we have a slight decrease in the amount of short interest or the amount of short volume. And so whenever you see the short volume increasing, that would actually be better for any underlying equity, because when it has the ability where the volume is increasing, or in other words, the momentum is increasing, you have the possibility of the stock going even higher than it has ever gone before. And so let's take a look at the short interest over time. We already know that in June 15th of 2020, look at where we were, $92 million. And now look at where we are right now, guys. 2021 of June 15th. This is not updated to July just because the data has not been calculated yet. We are not even at the end of July yet, and we have not even approached the beginning of August. So look at this, $5 billion in short volume. Again, these are just historic levels. Never been heard before. Short interest going from 92 million to $5 billion. 85 million shares as a short volume. We know that. And then we also know that margin is going to monumental highs. What happens when the hedge funds have to start liquidating their position because they are going to be losing money? That is when we will have insane margin calls for these hedge funds. And when you have insane margin calls for these hedge funds because they simply cannot take the amount of money that they are losing, they are going to create a massive short squeeze for AMC stock. And right now, not a lot of people understand this concept. Yes, a lot of people know that margin calls, a lot of people know what margin calls are. They know about margin. They know that the short volume on AMC is increasing. But what they do not understand is how this all relates together. And that is something I hope you understood from this video. We now added all the pieces of the puzzle together, and now you as an AMC investor will hopefully have more conviction for AMC stock because now you know what the hedge funds are doing, and now you know about the margin statistics. And with that being said, guys, I'm going to be talking much more about the AMC stock news because right now we have so much news for this stock. We have so much news about the general market. So make sure you guys subscribe, and with that being said, thanks again for watching. I'll see you guys in the next video.